Are you familiar with TOMO Mortgage? I'm not that familiar with them. I've seen their name a couple times. I actually had to research them to figure out who they are. Apparently, they're a direct-to-consumer IMB located on the East Coast. They were founded by some former executives from Zillow. Their whole idea is to build an AI platform that reduces the need for humans, increases speed. Their goal is to be able to create an automated AI platform that can accommodate any type of loan. Good for them. I'm all for technology. I'm all for letting customers experience mortgages however they want. However, and what makes me bring it up, I was reading the I think weekend edition of Axos Markets. It's a weekly newsletter that comes with their daily newsletter, and let me show it to you. And here you go. Here it is. And I came across this part in the newsletter that said, it's the third point in the newsletter, best rates now treacherous. And what this graph shows right here is what they say is, look, people that get the shop for the best rate get 6.3%, and people that don't shop for the best rate get 7.18%. I'm like, wow, look at that. That really caught my attention. And so as I started to read through this newsletter, it turns out that they're basing this whole thing. Americans will collectively pay $11 billion more than needed on their mortgages this year per new research from TOMO Mortgage. I'm like, per new research from TOMO Mortgage? I'm like, who's TOMO Mortgage and what kind of research are they generating? And so that made me, of course, go to the report. And I'll be honest with you, the report was just garbage. And I don't know why I'm gonna share with you, but I'm gonna share the report with you that I found to be straight garbage, and see what you think. And I'm gonna share the report the entire time. I typically don't like to do screen share the entire time, so I apologize about this. But I want to really show you this report. So here we go. The truth about mortgage lending. You can see it here. We get into it. They have these 4 sections. The first section is the real cost of confusion capitalism. So they make up this word, confusion capitalism. And what they essentially say here is they say, look, lenders who are evil, are out to try to optimize their profits at the cost of consumers, are confusing consumers so that they can drive revenue, so they can drive profit. And they're doing this so successfully that borrowers are paying $11 billion over what they should be paying because all these tricks that these evil lenders are doing. And so this is where you see it. Now, and here you see where they see the difference between the worst rate and the best rate. And then here comes some of their evidence of this confusing capitalism. And their evidence is either completely manufactured or completely bogus or completely misstated. In this first graph you see here, it says, look, they ask the question of 500 recent borrowers. They don't define what any of that means. You can see here in the asterisk bottom, based on a national survey of 501 recent home buyers directly involved in choosing a mortgage lender. Well, first, who are these home buyers? Are they their home buyers? Are they just random home buyers? And is 501 respondents enough to actually come to any type of conclusion? Is it useful data? But from this answer, from whoever these 501 people are, they say, look, when you think of a mortgage lender that offers the lowest prices, which companies come to mind, right? And what they did, what this survey says, based on TOMO Mortgage's interpretation of who's a high-cost lender and who's not, which is a whole different topic we're going to talk about, because they totally fabricate this scale, who they think is high price and who's low price, but that consumers weren't able to actually identify who the low-price lender was. Matter of fact, 43% of the time, they named a high-price lender as a low-price lender. And of course, the whole math behind this, who's high price, who's low price, is completely bogus, and they don't show it. They don't show their methodology anywhere. They don't show the questions of the surveys, which I'm sure are completely biased, and they don't show what the data is and what their methodology is, right? Not at all. And so they have this, and so I'll just keep going because I can rail on this forever, and I don't want to rail on it for too long. So what happens? They say TOMO invented this thing called True Rate, this calculator to be able to tell any consumer whether they got a good interest rate or a bad interest rate. right? And they don't tell you how they do this. They use proprietary analysis, which means they made stuff up. I'm going to use a bad word there. They make stuff up, proprietary analysis. We just made goofy stuff up. And then they say, and then we analyze hundreds of thousands of files from our lending partners. Who in the heck are they talking about, their lending partners? Who sent them hundreds of thousands of files to analyze? Like, I really question that. And when they analyze these files, how many characteristics do they take into account? How many apples for apples? They take in every single LLPA, every single one, and comparing apples to apples? I strongly doubt it. I strongly doubt it, right? And the whole point is this whole piece here. Oh, by the way, this keeps getting crazy. This right here too. The industry knows what buyers don't know, and here's what it says: home buyers only 27% of home buyers can adequately explain what interest rate points are. I'd love to see how they ask that question, right? And then they said, this. It's another thing here. In this, they said the Fed flagged this last year when they discovered that lenders with the highest interest rates also had the highest points on loans. You know what? This is what they're referring to. This right here. What page? I'm on page 5. So here's what they're referring to. They're referring to this report right here. The Federal Reserve, Bank of Philadelphia, the rise in mortgage fees, right? And the Bank of Philadelphia was curious why mortgage fees. And what they're relying on is in this little in here right here is the Fed speculates borrowers who pay points may. I want to underline again, may be going to more expensive lenders than borrowers who pay no points. All right, you know who gets the best rate? Oftentimes, borrowers that go to builders. Builders subsidize the interest rate, right? Very common right now. Does that mean that a borrower that doesn't have an opportunity to go to a subsidized rate is getting a bad rate? No, that's nonsense. This whole thing is just nonsense, right? It just gets more and more offensive, right? 30% of recent home buyers can't explain origination fees. They can't explain the fee sheet. They can't explain it. And what they did, by the way, they asked these people took a survey trick questions. They made up phrases and said, "Do you understand this?" Like a made up phrase. I mean, that just tells you the integrity this company took to create this report. And in the report, by the way, and I think I passed past it. Let's see if I can find it really quick. There's 2 pages of advertisement in here about how, look, here it is. TOMO Mortgage broke it from industry convention to provide flat rate commissions to our loan officers, ensuring there's no incentive for a loan officer to offer someone an inflated interest rate or excessive fees or provide preferential treatment to people who have higher loan amounts, right? Everything about that is bogus. By the way, just because you don't have high-priced loan officers, don't mean you have good loan officers. Don't mean that your customers have a good experience. Doesn't mean they get the right product. Doesn't mean they get the right experience, right? Or the right advice. I mean, Better.com trying to pay people minimum wage, and how that worked for them. They went nearly bankrupt and had to re-engineer their company. They're still trying to crawl back from it, even regardless of how much money SoftBank gives them. And so now these people from Zillow think they can do it better. Good for them. But they need to go out in a better way than just making stuff up. And what they're saying is, look, because we don't pay our loan officers a commission, they don't do bad things to you, we're not going to screw you of that $11 billion. And then they just make up a whole bunch of stuff in this report. And the thing that is more frustrating is that, Axos, a somewhat reputable publication, used their data. Like, Axos, you're better than that. Don't use crap like that. What are you thinking about? And then in this whole section, I'm not going to go through it because it will just make you as mad as it makes me. Tricks of the trade of how we sell bad rate. And it has, and by the way, the examples that they use here, I don't know if that's even real. Like, did they make that up? Where did that come from? Like, they have all these examples. Maybe they're real, maybe they're not real. And on the examples, what they say is, look, there's all these fees in here that the borrower doesn't understand. And by the way, they're not even legitimate fees. They're totally contrived fees so that these big, bad lenders can make all sorts of great money, right? Now, one thing comes to mind, IMBs have mostly been losing money 7 out of the last 9 quarters. If we're just stealing from customers, we're so stupid we're stealing from customers to just lose money? Like, this whole thing makes no sense. And like I said, I can't be more disappointed with Axos for running this. I'm hoping the people at TOMO Mortgage are okay people. Things like this make me think they're not. Like, you don't have to go to this extent. Hey, people at TOMO, I'm going to give you a little tip. If you paint the entire industry as crooks, you're going to be painted with the same brush. Consumers don't paint with a fine brush. They won't go, oh, look, Tomo told us everybody's stealing from us, but they promise us we're not. No, they're going to paint you with the same brush. You don't win that way. You cannot win by criticizing your competition. You don't. All you do is lessen the entire industry, and you'll suffer too. Instead, differentiate by standing out, by being better, by being exceptional, and don't do this type of crud. I'm trying not to cuss, by the way, so I apologize. Anyway, thank you. I've been going on a rant here. I would continue to go on a rant. I am not going to put a link to this report down below, but I did do a LinkedIn post today, and I did put a link to the report in my LinkedIn post. And I'll tell you, it's probably one of the longest LinkedIn posts I've worked on because I did my first draft and I was like, that's not strong enough. And then I did my second draft, but I got to behind my sixth draft. I'm like, that's offensive. I don't have to be that way. I don't have to stoop to tricks like Tomo. I just put a simple explanation of it. I hope we're all better than this. There's no doubt there's some bad apples out there. There's no doubt that there's bad practices, but I don't paint that across the entire industry. And I certainly want to be stupid enough to paint it across the entire industry that I'm a member of. Nevertheless, I hope you got something out of this. Thanks for letting me vent. This is a form of therapy. Hope you have a great day. I look forward to talking to you soon.